What's going on, everybody? Welcome back to another video. Hope you're doing well, feeling great, and enjoying freedom. It's a great day to have a great day. It's a great day to have ownership of real deal silver and real deal gold. In today's video, I wanted to talk about the precious metals, more specifically silver, and how the recent tariffs and the threat of potential retaliatory tariffs could affect the price or the premiums attached to certain silver, particularly the coin in question, the Canadian Maple Leaf, or really any Canadian coin for that matter. I posted a video about this already. We've since gotten an update, very big update. But really quick, just in case you're new, make sure to subscribe for a bunch of videos. Subscribe to my second channel for bonus videos and follow me on social media at Mykie DYDSS across all platforms. And 3 very quick things before we dive into the video. Number 1, if you haven't already, try you out some Celsius Energy. It's a healthier version of the other energy drinks out there. You can get a 12-pack variety pack on Amazon right now. I will leave an affiliate link in the description so you can try out the different flavors. 2, if you haven't already, make sure to download Webull and fund your account if you are interested in investing. They're going to give you some free stocks just for doing so, and it's really easy to navigate on the app, which makes it really simple for new investors to start investing. 3rd and finally, if you need any silver or gold stacking supplies, whether it be airtight tubes and capsules, or even prepping supplies, or anti-tarnish paper, microscopes, things like that, I will leave those linked in the description for your convenience as well. Alright, so, into today's video. For those of you who didn't see, on March 7th, right here on my YouTube channel, I had a pre-recorded video scheduled to post, and it posted March 7th. It was titled Silver and Gold Canadian Maple Leaf Coins to Skyrocket in Price, Precious Metal Premiums and Tariffs. If you don't know what I'm talking about, here it is right here. I posted it just a couple days ago. Very easy to go find on my channel. Did very well. I'm very happy with the video's performance. And most of the people, the overwhelming majority of the people who watched that video knew exactly what I was talking about, and it was a very relevant topic. It was something that a lot of people were wondering. It's something that a lot of people were curious about or worried about. And it begs the question, how is it going to affect silver and gold, the coins, the rounds, the bars, specifically ones coming from Canada? If we are hitting Canada with tariffs and they're hitting us back with retaliatory tariffs, could that, in theory, drive the premiums up on coins, Canadian coins, here in the US? I think yes. And the reason I think yes, and like I said, the overwhelming majority of people knew what I was talking about. There were a small number of people that probably just read the title of the video and left a comment before actually watching it, but I'm not talking about anything we've been hearing about for a long time. I'm not talking about the people that have been predicting for years, oh, Canadian coins are going to go. I'm not talking about that. I'm talking about current events, recent events, and what's been transpiring within the last 2 weeks. Canadian retaliatory tariffs raised the price of Canadian goods being brought into the U.S. From everything that I had read at the time, and like I said, there is a major update, which we'll get into in just one second, but from everything that I had read at the time, precious metals didn't get an exception, likely causing dealers to either A, raise premiums on Canadian coins to U.S. buyers, or B, stop carrying Canadian coins altogether, which would ultimately make them harder to find and further inflating the premiums on those coins. Does that make sense? Or do you at least understand my perspective? I hope so. So that video was filmed on March 2nd, 3rd, 4th probably, and I scheduled it to post on the 7th. I've been trying to film 2, 3, 4, 5 videos a day. That way I can kind of have them in the bank and release them one by one. That video was posted on the 7th. Also on the 7th, after posting that video, Hero Bullion posted an article. Also on the 7th, I came across it after the video had already posted, and I wanted this to be an update. I want to read what this article has to say, because I think it gives us a lot of key information, because there have been adjustments made in this whole trade war, tariff fiasco going on right now. So, for those of you who want to read the article, here it is right here. You can either go, I will leave it linked in the description for reference. All credit to herobullion.com. Or you could just go and Google it yourself. But the title is Gold and Silver Prices Soften After Trump Tapers Tariffs. And we're going to read this article. And something else that I want everybody to pay very close attention to is what the spot price is doing between the time that this video is posted and whenever the next amount of news comes out. Because the unfortunate fact of the matter is something being uttered out there could drive the price up or down. Fear, excitement, hype, worry. That's really what drives the market up and down. But here's the article. Gold and silver prices soften as Trump pulls back on tariffs. Gold and silver pulled back today, but will end the week in the green. Gold prices dropped marginally, peaking at just under $2,930 an ounce after market open before sliding a few dollars lower than Thursday's closing price. Silver suffered a bigger loss, sliding over 20 cents per troy ounce. The price action drove the gold to silver ratio higher, up from yesterday's close. The precious metal market fell in line with Wall Street to close out a volatile trading week, with the latter erasing the entire post-election Trump bump amid investors' concerns over President Trump's tariff wars with China, Mexico, and Canada. So, quick little side note before I get into the next part of the article. It's obviously not just about Canadian maple leafs. This can go for Chinese silver pandas, Mexican silver libertads, and gold pandas, gold libertads, gold maples as well, obviously. Moving on. On Thursday, the U.S. leader expanded exemptions for Canadian and Mexican goods, taking a bit of wind out of the sails of safe haven traders who pushed gold to multiple all-time highs to start 2025 in the wake of the aggressive sanctions on the USA's North American allies. The new adjustment to what was a blanket 25% tariff on all imported goods from Canada and Mexico exempts goods that satisfy the U.S.-Mexico-Canada Agreement, USMCA, rules of origin, according to the White House. Additionally, tariffs on products falling outside of this set of established trade rules will face a reduced tariff of only 10%. Goods that meet the USMCA preferences will no longer be subject to a tariff, according to the new rule. The adjustment comes from the heels of criticism from the automotive sector, which analysts say would be disproportionately impacted by the tariffs on Mexico and Canada, two major importers of vehicles and automotive technology into the United States. Our automotive industry should not suffer significant disruption, the White House said in a fact sheet published Thursday, just because of the structure of its supply chain. For the precious metal sector, the expanded exemptions could drive down safe haven demand for gold and silver, which has largely been buoyed by fears that President Trump's tariffs will raise prices for American consumers. Also, impacting safe haven markets is likely today's jobs report, which came in worse than expected. The U.S. created only 151,000 jobs in February, up from 125,000 on January, but below the median projection of 170,000. Wall Street sank the news, ringing in its worst week since September of 2024. Also, by the way, side note, as I'm recording this video right now, the S&P 500 is down to right around where it was in September of 2024. Speaking of September of 2024, wiping out roughly 6 months worth of gains in value. Moving on. The weak labor market report, paired with a 0.1% jump in the national unemployment rate, hit the implied probability of a rate cut from the Federal Reserve when the Federal Open Market Committee, FOMC, meets on March 19th. CME FedWatch now predicts a 3% probability of a 25 basis point cut at that meeting, down from 12% yesterday and 8% last Friday. That being said, geopolitical uncertainty continues to underpin historically strong demand for safe haven assets following the White House decision to pause intelligence sharing with Ukraine and cybersecurity defense operations against Russia. The Russian army renewed its offensive against Ukraine. The move prompted condemnation from President Trump, who promised a series of large-scale banking sanctions and tariffs on Russia until the country takes steps toward a ceasefire and final settlement agreement on peace. The wars on Ukraine and Gaza were significant safe haven demand drivers throughout 2024, and developments in either conflict should have a palpable effect on the market's appetite for gold, silver, and other metals heading into Q2 2025 and beyond. Next week's Consumer Price Index, which, by the way, for the record, has already been released, but according to this article, will give traders more insight into the direction of inflation, which should impact the Fed's perception of economic progress heading into the March meeting. This report will be released on Wednesday, March 12th. One day later, on the 13th, the Producer Price Index, PPI, will give the FOMC another data set to consider before deciding whether an interest rate cut is justified. Interest rate speculation was a major market driver for precious metals in 2024, and the correlation between market rate cut expectations and gold prices is expected to continue this year. Overall, investors should expect a news-heavy week ahead as markets prepare for another Fed meeting, more news on tariffs, and fresh developments in several geopolitical conflicts. Gold and silver lost moderate ground today, but will end the week in the green. That concludes the article. Once again, if you want to read it for yourself, I will include it in the description section down below. So the CPI report came out yesterday, and inflation is down. Inflation's down. Tariffs are still going back and forth. But regarding the silver and the gold, it sounds as though shouldn't threaten the silver and the gold. And regarding the Canadian maple leaf, which I, at the time, thought that if that was to get hit with a tariff, would drive up the premiums, which, if you think about it, is like a different form of a tax. See, silver and gold, when you pick up a coin, when you pick up a round, when you pick up a bar, sure, there's spot price, but then there's something that I've been calling for a couple years now, stack price. I don't think spot price matters. And if you want to know exactly what I mean by that, I posted an entire video just a couple days ago titled Spot Price of Silver and Gold Does Not Matter, where I go into great detail. And I gave example after example after example of why the spot price is no longer as relevant as some of us think it may be. But when you go and pick yourself up a silver coin, let's focus on the maple leaf. When you pick up a little 1 ounce silver maple, sure, there's the spot price, but there's also going to be a premium. In some cases, there is sales tax. And if tariffs were to interfere with our ability to get silver at the price that we would prefer to get it at, that's another thing attached to it, which doesn't really seem like is going to be the case, at least not at this time. This is part 2 to the original part 1 video, and who knows? Maybe in a couple days or another couple of weeks, I'll have to post a part 3. Maybe there will be another update that changes the direction of where this whole situation is headed. But if it drove the premiums up even more, it's almost like a tariff tax, or almost like a tariff premium attached to the already high premium or higher than we'd prefer to pay premium coin. On Canadian coins, at least. Potentially Mexican coins, Chinese coins, and whatnot as well. But it's just something to think about. It's just something to consider. And the reason I brought it up was because it would be another excuse to drive up prices. Or maybe I shouldn't say excuse. Another potentially valid reason to drive up prices. Or drive up premiums. You see, the local coin shops and the online precious metal dealers, more specifically the online precious metal dealers, they were the first ones to jack up their prices. Back in 2020, for those of you who have been stacking for 5 years or more, you'll know exactly what I'm talking about. Little over 5 years ago, the premiums on generic silver rounds, silver eagles, silver maples, your everyday coins, rounds, and bars, $1, $1.25, $1.50 over spot. In some cases, maybe a little bit closer to $2 over spot. No big deal. Premiums hardly existed back then. The crash of 2020 happened. Spot price got cut almost in half, and the premiums got jacked up through the roof, so much higher than they were before that now the grand total out the door price tag would have been more than what you would have paid prior to it crashing in the first place. So the spot price was about $18. Let's just say the premium at the time was about $2. Your out the door stack price is about $20. Spot price got chopped down to $11 or $12. It started making a little bit of a recovery, and you would think in order to keep that same number in line, the out the door stack price, the premium would have got cranked up to about $8. If the spot price went down to $12 and they still needed to sell it for $20, $8 premium. That wasn't the case. We were now looking at a $10 premium, $11, $12, $13 premium. So all of a sudden, the premiums were so much higher, even though the spot price was so much lower, it was causing us to pay even more per troy ounce than we were prior to the crash. Now, my initial reaction to that at the time, in the first quarter of 2020, during the big COVID crash, my response to that was, I would assume that most of these online dealers got a majority of that silver at $16, $17. They're businesses at the end of the day. They're trying to make money too. I understand that. And I do believe in a free market. I do believe that if a customer is willing to pay, the business should be allowed to charge whatever the heck they want to charge. If they wanted to attach a $100 premium to each coin, and there was enough of a demand, if enough people were saying, hey, yeah, I'll pay the $100 over spot, then yeah, they should be allowed to do that. So I couldn't really be mad. I was frustrated, and it was irritating, but at the same time, I do respect their ability to do that. And plus, they're not in the business of losing money. They have to sell at a certain price. The big question, or the big confusion, came when spot price recovered. See, spot price, like I said, it got chopped down to $11, $12, then it made its way back up to $18, which is where it fell from upon the COVID crash. Spot price recovered fairly quickly, but the premium stayed high. The premiums were still $8, $9, $10, $11, $12 over spot for each coin, and round, and bar. Why was that? My theory was because the online precious metal dealers learned that we're willing to pay. And if we're willing to pay, they can continue charging. They can continue charging until there's no more silver demand, and guess what? That'll never happen. There will always be a silver demand. Fast forward 100 years, there will still be a silver demand. Silver is a very important metal. So is gold. All of the different industries that it's used in, silver is used like solar panels, semiconductors. It's the most reflective metal. It's the greatest conductor of both heat and electricity. It's an incredible metal with over 10,000 different ways of it being used. So silver is always going to be important. Gold is always going to be important. And there will always be a precious metal demand. There's a finite supply. And as time goes by, it'll become, slowly but surely, more and more scarce. Which helps us, the stacker, looking to preserve our wealth and store our purchasing power as the dollar bill weakens over time. The point I'm trying to make, and the reason I'm even talking about this, is because there was almost like a market crash premium attached to the coins, rounds, and bars that already were carrying a premium. There was a market crash premium so that the online dealers wouldn't lose money. In the event of a trade war and tariffs getting hit back with retaliatory tariffs, if that were to hypothetically, which it doesn't seem like it's going to be the case, but hypothetically, if that were to affect the precious metals, there would be a tariff premium on top of the coins, rounds, and bars that already carry a premium. So who knows? Would that mean that Silver Eagles would be easier to get our hands on than Maple Leafs? Possibly. But either way, I wanted to share that article today, and I wanted to talk a little bit about this because these different types of premiums exist for different reasons. Are they painful for us? Those of us who are looking to get our hands on as much physical silver content as possible? Oh yeah, it's rough. Hurts my soul to think about. And that's part of the reason why I haven't picked up nearly as much silver or gold in the last couple of years as I did in the first couple of years of stacking silver and gold. I started in 2017, went crazy in 2018 and 2019, getting as much as I possibly could, continued in 2020 getting as much as I possibly could, even though the premiums were higher, and then 2020 is when I became a little bit more interested in wealth building as opposed to wealth preservation, and I took a step back. I've still picked up silver and gold, but I took a step back. The premiums weren't really making a whole lot of sense to me. But either way, that's the update. The tariff or retaliatory tariff update on Canadian silver coins. I'd love to know your thoughts in the comment section down below. If you guys enjoyed today's video, please hit that like button, subscribe if you are new, subscribe to my second channel for bonus videos, and follow me on social media at Mykie DYDSS across all platforms. And 3 really quick things. Number 1, if you haven't already, try you out some Celsius Energy. It's a healthier alternative to the other energy drinks out there. You can get a 12-pack variety pack on Amazon right now. I will leave an affiliate link in the description. 2, if you haven't already started investing and you'd like to, make sure to download Webull and fund your account. They're going to give you free stocks just for doing so, and it's really easy to navigate on the app, which makes it really simple for new investors to begin investing. Link in the description. 3rd and finally, if you need any silver or gold stacking supplies, whether it be airtight tubes and capsules, anti-tarnish paper, mini lock boxes, microscopes, the list goes on, or some prepping supplies, by the way. It'll all be linked in the description for your convenience. Once again, I want you guys to head on down to the comments and let me know anything and everything related to today's video topic. Just a little bit of an update on a video that I had already put out. A little bit of an update, a little bit of a part 2. Really hoping I don't have to make a part 3, but I thought some of this information was important to share. And if you'd like to read the article for yourself, see it with your own eyes, it'll be linked in the description. Thank you guys so much for watching. See you in the next one. Don't you dare stop smiling. Peace.